six figures with seller financing investing. Let's get into this.
Yeah, man, that's crazy. 40 days, God, I've been Swayze. Grew the beard out, that ain't shady. That's a bird, man, I ain't baby. Talking hope out, that's so crazy. How I got a shot, raise the bean sprout up, put a crown up on her head so the boys seeing, no, that's a lady. If you ain't catch a double that time on the last rhyme, dog, I could help you. I got plenty more where that came from. When I brainstorm, I need shit.
What's good, baby? It's your boy Dale. I'm back in the saddle again. Our motto is to buy, build. We already bought it already, so we already own it, free and clear. Refinance to long-term debt, cash flow. That is the motto. Cliff, man, is that a pretty strong motto, man? What do you think?
Man, the model is strong. Like, you're getting each piece of the invest, right?
What it do, baby? It's your partners, Dale and Cliff, back in the saddle, always looking better than you. Don't get mad at us. Talk to Jesus about that thing. Now take that damn picture. You see it, Cliff? What's up, baby? What's going on, baby? How was the week, man? What's going on with people? What's going down, brother?
Wow, it's man, another good week. You know what I mean? So the market's kind of doing its thing, man. But we back into it, man. Looking at something bigger and better going forward.
All the time, man. And no, you know how we ask the question every single time. Did we get the bag?
Man, always doing it.
We got that bag. Yes, sir. We checked into I Got That Bag University, baby. We got that bag, man. But man, let's dive into this, man. Cliff, man. Last week was probably one of, if not one of, our biggest weeks, man. We went through making six figures with joint venture investing. It kind of took off. People were like, man, this was a great live, man, which is great. And I thought it'd be wise for us, man, to kind of dive into another investment strategy, go a little bit deeper, which will be fine, and kind of provide some solutions, guys. But before we jump into that, you know, since we got a licensed appraiser, licensed GC right here on the line with us, my man Cliff Dim. We're gonna dive into our first thing, which is all the time, the current market analysis. Guys, each and every week things change. Am I right, Cliff?
Oh yeah, that's especially right now what's going on in the market. It's changing every week. So, from what I'm seeing right now, we're still seeing real estate is slow. It's still slow. Interest rates are still high. We're gonna go get into it where we think it's going, but right now it's slow. The whole market's moving slow.
For sure, it is slow, and we do this segment initially up front first, guys, is because we're kind of boots on the ground. We're actively aggressive in real estate. I looked at about 3 or 4 deals today. Shout out to Karima Immaculate there. She's on Instagram. Y'all, she's killing it. She's one of the young budding stars. Man, watch out for that young lady. But what's going on is we're seeing a lot of things change. Didn't the Fed actually raise the rates another 0.25 basis points this week?
Yeah, they did. Yep, raise it 25 basis points on it, and but I see we can get into it.
We're gonna get into it. We're gonna get into it, yeah. This is one of the most popular segments that we actually do, is because me and Cliff have different perspectives on what's going on in the economy, but we both conclude that it's a mess. It's a mess.
Oh yeah. Without a doubt.
We both conclude that, but we're gonna dive into this real fast, and then we're gonna get into a very popular strategy that most investors don't know about, or they know about it and don't know how to implement it. We're gonna dive into that, but let's go into the current market analysis. We're gonna bring in our people from Valuetainment. We like them because they really dive deep into the numbers. This is about numbers, actual facts. This is not invest and hope. This is invest, strategize, and implement. Real simple, guys. All right, let's dive into this real quickly. Let's get it in real fast. Here we go. This is the current market analysis. Let's go and get it in.
Reveals ominous Great Depression warning sign not seen since 1932.
Wow.
Okay, a GDP report is saying that a Great Depression warning sign not seen since 1932. Here's what it is. Even the areas that which contributed positively to GDP are not necessarily signs of prosperity. For example, business investment grew at only 1.4% in the fourth quarter, but that was almost entirely inventory growth. Non-residential investment, a key driver of future economic growth, was only up 0.7%.
Wow.
Meanwhile, residential investment fell off a cliff, dropping 26.7% as consumers were unable to afford the combination of high home prices, high interest rates, and falling real incomes. But perhaps most troubling is the precipitous drop in real disposable income, which fell over $1 trillion in 2022. For context, this is the second largest percentage drop in real disposable income ever, behind only 1932, the worst year of the Great Depression. To keep up with inflation, consumers are now depleting their savings and burning through the stimulus checks they received during 2020 and 2021.
Wow.
That is the one thing that I don't think enough people are talking about. You can look at everything that's good, and you can say, well, look at what's going on here, look at what's going on there. But when people run out of savings, something happens to them. And
Cliff, what's your thought process on people's savings running out, man? I saw a graph of credit card debt is going up and savings is going down, man. That's a red flag. Would you agree?
It's part of the plan. That's what I see. I see it as part of the plan. From what I can tell, what the Fed is doing is creating a scenario where you reduce cash flow. That's what's happening right now. That's according to the plan. That's what the interest rate hike was supposed to do.
Wow. It's according to now. Explain the plan. What do you mean by the plan for the people?
The plan is there's too much money in the system.
Yes.
It's flowing too fast.
Okay.
That's inflation.
Uh-huh.
In order to reduce inflation, we have to reduce the amount of money in the system and reduce how fast it's going through the system.
Yeah.
If we make everything expensive by raising interest rates, people don't buy as much. When you want to go buy that house, cool, it's $100,000. All of a sudden it's $120,000. You're like, hey, I may still get it. The interest rate goes from 3% to 6%. You're like, I can't do it. Money stops flowing. That's what the Fed wants.
Yeah, but the thing about it is what I'm kind of saying, and guys, we're gonna go into this a little bit more, but I hear what you're saying there, but I would say my thought process, but the prescription is to do the exact same thing that caused the problem, which is print more money. And so there is a different plan as well, also that I see as well. I think that this is by design to force dependence upon the government, because only one that can actually bail it out is the government right now when it comes to all this printing. Would you agree?
Right. I agree. But my thought process is inflation is status quo. We had inflation in 2009. We had inflation in 2010, 11.
Yeah.
Inflation is part of the game. What's happening now is the Fed is not doing quantitative easing. They're doing quantitative tightening. They're selling their assets to take cash out the system. This is
why I think they're doing both. I think they are doing QE and doing what the quantitative tightening at the exact same time. Let me give you an example. The Inflation Production Act, that's another $7 trillion into the system. And it has to be spent within a 12-month time frame. Hence quantitative easing, QE. Now I agree, they are selling some assets as well, which is tightening. So it's kind of a balancing act on both sides. You agree?
Oh yeah. I don't consider that quantitative easing because the Fed's not doing it. That's Congress. They that's a whole nother branch. They spend it. The Fed, who manages the central bank, I don't see them right now. They're selling their assets. They're selling their assets and they're raising interest rates to slow things down. What I'm going to see is the whole goal is just to get inflation down to 2%. So we're still going to have inflation. Their goal is 2%. Remember what they say. Listen to their words. I listen to their words. The goal. That doesn't mean everybody's got goals. Don't mean you're going to hit them. Reality comes in.
For sure.
Reality is going to hit them around 4%. And they're going to say, we're pretty close. This is a long-term goal. We'll get that over time. But once they get to 4%, they're going to get status quo back.
Yeah, I'm hearing that, but I think that because they cannot stop printing,
Right.
I think that what people they're hoping 4%. I don't think we're going to get there. I don't
Okay.
think we are.
I'll say this, Dale. I said that they would drop from 75 to 50. I was right.
Huh? Yeah,
I
you
said
was
they
right.
go from I said they go from 50 to 25.
Yeah, yeah,
I was right.
yeah.
This will be the last rate hike you will see. You will then see cuts this year. You
Now,
will see the Fed cut this year.
why you said they're going to cut it?
They have the inflation is coming down fast because things didn't get expensive over a year, 2 years. They got expensive in months, which means
Yes.
everybody stopped
Yeah.
spending money
Yeah.
all at once, causing
Agreed.
inflation to crash.
Yeah, I agree.
If they keep holding, it'll keep crashing. They don't want to crash to a Great Depression. At some point, they're going to pull up, and that's when they're going to stop.
So what you're saying is they cannot continue to raise rates because that's going to result in a crash.
Right.
And they don't want that because then all hell breaks loose.
Oh, yeah.
What they're wanting is they're going to want they want to go tightening because all the tightening did is that has changed the the buying habits or the spending habits of the consumer because the consumer is really driving this. So this is a
Right.
mentality controlling type of things. So now they're saying, okay, we've seen it come down a little bit. Well, let's go ahead and then begin to cut the rates. Here is where I think that you and I toil at is they are banking that the consumer's actions are going to change. I don't think so. The reason why is because of the fact that they had to give themselves the consumers had to give themselves a manufactured pay raise in borrowing more money in credit card debt. Their savings is going down at an astronomical rate, which means they have less money. So things are costing more and their savings is going down. That's a bad type of scenario there. And so what the Fed is going to say is, well, we're cutting the rate so you can begin to spend. So the question is going to be like, spend what? I don't have any savings. It's costing more money for me to buy the same goods. What am I going to spend?
The money is going to come from the low interest rates. When they cut, you see what I'm saying?
I hear that. I hear
Right.
what you're saying, but that is a strategy from the Fed saying, okay, Cliff, we know we're going to give you a lower rate for you to go out and buy that house. It was once 5, now it's going to be 4%. Now it's going to be 3%.
Right.
Cliff goes to the money. Cliff's going to say, what money? I ain't got no money. My savings is depleted. I owe more money on the credit card debt. It's costing me more money on the credit card debt as well. Where the money coming from?
The money's going to come from growth, from the economy, from the extra income that comes from businesses now being able to have additional liquidity because their business is actually thriving, not declining. If the company you're working for fired you because the company was declining, that same company will hire you when the company starts growing.
So what factors in a company's growth then? Because again, I have to go back to the consumer's actions, their behaviors. If the consumers don't have the money to go out and buy new things, where's the growth going to come from?
So when you look at the average consumer and you look at the average business, most of America is small business, right? So what most people don't understand was they say small business is like 85% of that are single entity, individual people. Where do individual people get most of their money that comes from? They attach themselves to other big businesses. They work as a independent contractor in many situations, a realtor in many circumstances. Right now, if 80% of realtors are making $0 because there's no market, that is 5% of the market.
Sure.
When real estate comes back, guess who gets paid? Realtors get paid. Insurance agents get paid. Another independent contractor. Contractors get paid. Your plumber, your electrician. That spurs a large part of the economy.
I get
then
you.
so when they cut rates, it'll jumpstart. It'll
Well,
start having money come back, and it'll start coming back over time.
but this is the thing that I think you're missing. What is the origination of the growth? The flowing of cash, the spending the money.
Right.
Where is the money going to come from if the consumer base has lessened savings and they owe more on their credit card debt? Where is it coming from?
Income.
Income.
Right.
Where's the income go? So what you're saying is because of the small businesses growing, right?
Mm-hmm.
If it's growing, they're able to pay a better wage, right?
Right.
Right. So what you're saying is the companies, the producers, are going to be able to pay the employees a higher wage, then they can go spend that money, right?
Right. So you have two components.
Okay.
One is that inflation, costs went up.
Sure.
Right. Costs went up.
Sure.
That has a negative response on the consumer. They can't really pay for it.
Uh-huh.
But a bigger problem is no money at all.
Sure.
What would you rather? Basically, the Fed has two problems. Let's break it down, make it real basic. The Fed's got two problems. So you could have not enough money in the system or too much.
Yeah. They
have to make a decision. They're going to choose too much. Period.
Okay.
And when there's too much, money will flow. So if they stop raising rates, you'll start to see the economy do a little bit better because it digested all the rate increases so far.
We're going to see. This is, me and Cliff, guys, we have this discussion over time. It's all good. Some things he predicted came true. Some things I predicted came true, which is fine. It's not a competition. We just we like to reason together. Sometimes some things we don't agree on. And it's all good, baby. If you agree on everything, choose another room. That's the bad room to be in. But for me, this whole thing is predicated, in my opinion, upon the consumer base's actions. Because we're in a debtor nation, and if money's not flowing organically, in other words, producer produces the goods or services, consumer comes in and likes it, you guys agree on a price point, currency is exchanged, therefore cash flow is going on. This is what's going to do this. So my thing would be this here, is we're going to really see if what Cliff is talking about, them cutting rates, is going to cause a change in consumer spending and saving. Because right now, in my opinion, we're at a red level line because people have manufactured a pay raise in credit card debt, and now they owe astronomically more than what they have in savings. They're literally living paycheck to paycheck, and that is a concern for me. Would you agree, Cliff?
Yeah. Oh yeah, it's a concern. That living paycheck to paycheck is definitely not what they're trying to do.
Sure.
The number one thing they could do to stop that is raise interest or lower interest rates. So we're gonna see.
We're gonna see. Gonna see, y'all. We're gonna see. It's gonna be interesting to see. It's gonna be really interesting to see. And we'll do a show on that one, guys. All right, let's jump into the thing, guys. Y'all know the title. It says how to make six figures with seller financing and investment strategies. Okay. Now you may say, man, what is seller financing? Cliff, if you could, man, before we break down the strategy, man, what is seller financing for the people in the back row?
Seller financing is where you or the property owner can act as the bank and provide funding to a third party.
Cliff. So you mean to tell me that a consumer and or an investor can act as a banking institution in a small format to a consumer?
100%.
Yes, sir. So, but therefore, compound interest is really prevalent in a mortgage, can be a benefit of a seller finance owner, correct?
Correct, right.
Man, and they can also get a down payment up front, right?
All day, yep.
Ooh, yes, sir, y'all. Cliff, as you know, man, we actually have three things that I focus on when it comes to real estate investing. Three strategies. I keep it real simple. You insure, you leverage properly, and then you protect. Every real estate strategy is gonna hit these 3 points: insure, leverage, and protect. So let's dive into the seller finance strategy. Okay, let's dive into this real fast, y'all. I actually have a presentation for y'all so y'all can see what's going down in the back row. All right, guys, we did this last week when it came to joint venture investing. We're gonna walk through a strategy. Clip, chime in when you want to chime in, which will be fine, which will be great. And remember, with any business model, you're always trying to solve a problem. Would that be correct, Clip?
Yep. It's always,
Gotcha.
always what you're trying to do. Solve problems. What we
Solve
do.
a problem as fast as you can. All right. So let's walk through a seller finance and investing strategy. Okay. What's the owner's problem? Great. The owner has a job transfer. Real simple. Can't sell the property. All right. No one wants to buy at this price point, or he can't lease the property. Okay. Also, can't sell the property means it could be a listing expiring as well. That is normal in real estate. They can't sell it. They can't lease it. All right. So what's the investment opportunity for you? No problem. You can purchase the property. Now get this, with no credit check. And it's a quick closing. Why? It's an owner to seller transaction. There's not a middleman there. Now, they can be with a realtor. It can be, but it doesn't have to be a realtor. Okay, it could be an owner to seller scenario. Quick closing. And I would say when you do this, please close the title company. Please do that if you can. All right. Then,
and it might be a good idea also to get an NMLO to make sure all the docs are compliant.
Yes. Oh, that's good, Cliff. Oh, another NMLO is what's an NMLO for the people, Cliff? Tell them.
It's basically just a mortgage officer, right? So you can just Google it if you're just looking for somebody, or a mortgage broker. You might know them that way. Just contact a mortgage broker and you can find some online and they can help you with that process. Very
simple, guys. They don't work for free. Okay. Right. But you as an owner or a seller don't have to pay for that. That's normally falls upon the buyer. All right. Here we go. Now you want to make sure if there's debt on the property, and that is a possibility, that you confirm the mortgage information and confirm the tax information. A lot of investors do not do this step here, and then they get caught in court. You want to make sure that you confirm all this documentation, and a good NMLO is going to ask you that information. They're going to ask you that information, a good one. Okay, there's some bad ones out there. And then lastly, what happens? Well, as far as successful investor, you're owner of a property, right? Your balance sheets grow because you're not adding an asset to your balance sheet, and your cash flow flows. Now, how does your cash flow flow? If you buy a property via seller financing, you can do the exact same thing when you sell it. The exact same thing. Or if you're selling the property, okay, you're getting a down payment and an arbitrage there in cash flow if you have debt on the property. It's very simple. Does this make sense, Cliff?
100%. And another point is also with the insurance, make sure that you get added onto the insurance. So if anything were to happen to the property, you or the company you own that is doing the deal is an additional insured.
Yes, guys, you got it. These are pivotal things to do. If you want to, guys, share this video with everybody that you know, at least 5 or 10 people, because we're going through specific instructions. We can go a little deeper if you go to the course, but we're giving you a short synopsis, which is fine. Now, here we go. Let's go ahead and go to an example real fast, Cliff. Let's walk through a real live case study, okay? It's going to be simple, guys. It's not going to be hard to do. Come on now, computer. Got it. Gotcha. Okay, great. Here we go. Let me bring out our old calculator real fast. Cliff, I got me a little calculator. I like this calculator. That's nice. I like this calculator. Real simple, guys. All right. Yeah. Let's come from if you actually own the property as an investor. You not own it, okay? And you actually want to sell the property via seller finance, all right? Let's say, for instance, you actually owe $100,000 on it. That's how much debt you owe, all right? That's how much you owe. Now, let's go back here. Let's just say, for instance, your property is really worth, though, and I'm using real numbers, $150, all right? Let me go back. $150. So if you owe, your property's worth $150,000, but you owe $100,000, right? You actually have $50,000 worth of equity there. Okay. Well, most of the time you have to go to a lender and refinance, and you can, no problem. It's all good. But but the arbitrage is pretty small. Well, if the property's worth 150, what do you sell the property at? 150. Right, 150. So let's go through the numbers real fast. $150,000, all right, times how much Cliff, what's the normal down payment percentage in a seller finance transaction?
Minimum is probably going to be 10%.
So let's say 10%. 10% now. Boom. $15,000 of down payment. That goes to you. To you as profit. You. All right? But remember, the sales price is a 150 minus the 15,000 you got. How much of a mortgage are they paying? They are paying what? $135,000 over a 30-year term. How much do you actually owe? $100,000. All right? So what happens? Now you have $35,000 of equity still in the deal, which is really your equity. It's yours. It's yours because you are the lender. Okay? Now, if you're paying, let's say for instance on $100,000 you're paying, I'm making it up, 3% interest rate. Cliff, what is the normal interest rate when it comes to seller financing?
9-10%.
So wait a minute. Hold on for the folk in the back row. You're paying on $100,000. You're paying what? 4% interest rate, right? 100,000. So you're paying not that much of a PI payment. But what's going on now is you're actually paying now. Someone owes you $135,000 at what? 9%. 9%. That's pretty tight, ain't it? 9%. If we use simple interest, guys, I'm gonna use simple interest. I'm not gonna use compound. Let's just say $100,000, y'all. I'm gonna use simple interest times what? 4% is what is your interest rate. That's 4,000 divided by 12, right? That's $333. Again, this is interest only scenario, okay? Because I don't have a compound interest calculator here. All right. So let's say $333 is how much you're paying. Remember, you're doing $135,000, right? They're paying you 9%, right? That's $12,150 annually divided by 12, right? That's $1,012.50 minus the 333 and 33 cents that we just saw. You're netting. This is interest only, $679 a month. That right there times 12 is what? $8,150. Go ahead, Cliff.
And I was going to say, so look what just happened. You just made money 3 different ways. The first thing that happened, you got a down payment. Now you up 15 racks. 15,000, you go keep that. Go on vacation, do what you do. The second piece is you got equity. So if you want to sell that note that you're creating, and that's what you're creating when Dale's going through, we call that a note, a mortgage note.
Yes.
You could also sell that if you'd like, a second profit source. And the third one is what Dale just explained to you, making about $600 a month, sitting back and just letting the money come in. That's what they call mailbox money. When they talk about mailbox money, that's what Dale's talking about right now.
Yes, sir. So let's look at this. Remember, we said 6 figures, right? 6 figures. From a cash flow basis, let's say for instance, it's $8,000 annual. Let's say you did that you did this transaction 5 times a year, 5 times. So the $8,150 times 5, right? That's $40,750 in straight cash flow net that you're making. All right, $40,750. Now let's do this here. The $15,000 that you actually made up front times 5. $75,000. Okay, let's do the math. All right, 75,000 plus 40,000. I'm gonna say 41,000. I'm gonna make it even. 41,000. That's $116,000 that you've made. You made 6 figures now. And to be honest with you, 35-40% of that is what? Cash flow. So if you did it again next year, now you're at $80,000 cash flow. You did that following year, now you're at 6 figures cash flow. Right. We ain't got to the $50 down payment. We ain't got none of that. That's other sources. We just talking about cash flow there. That's crazy. That's crazy numbers, Cliff. What do you think?
Oh, it's nuts. And then what ended up happening is the second thing that we said with the wealth is you had how much equity? about 35K equity. Times 5 there. What's 135? Is it 35?
35,000 times for, oh man.
Yo, net
Yeah,
worth just jumped 175,000. Plus, so you made $175,000 in wealth, plus additional $100,000 of cash in your pocket.
Yes. Man, I don't know about you. Yeah, that's a nice little deal, huh? And don't mix in subject to investing with this. Oh my God. that is another strategy that you gotta pay for that. You gotta pay for that one though. But anyways, guys, I hope this made some sense on the power of how you can make six figures in real estate, guys. It is not as difficult as people think it is. I'm not saying it's easy, but with the right type of wise counsel around you, the right partnerships, being in the right rooms, you can do it fairly easily if you apply yourself. Would you agree, Cliff?
Yeah, 100%. Yeah, and when you're doing these type of transactions, you're gonna want to have somebody around you who can walk you through this process, because making a mistake with this can be compounded.
Yes, you can.
Because you may hold on to this for years and not have done it correctly up front, and now you're in a problem. And so you want to make sure you do it correctly up front with the right people who understand the legality and understand the process of what you're going through when you do it. Because you can see it's lucrative. Let's not mess that up. Let's do it right.
Yes, guys. So again, in this strategy, do not take shortcuts. Okay,
Right. Yep.
Don't do that, guys. One of the biggest things that I see people do, Cliff. Hey, Nicky, how you doing? One of the things that I see, Cliff, a lot of the times, man, is they take shortcuts. Please don't do that. Please partner with the good NMLO. Please partner with a good real estate attorney. Please partner with a good mentor, somebody that can walk you through what you cannot see. To this day, me and Cliff consult one another in our squad together all the time. We talk to our attorneys, accountants, our bookkeepers, our tax attorneys, our title company partners. We talk to a lot of people to make sure that we're doing the right strategy, because things change. And if our people don't understand that the tax code changes every year, correct, Cliff?
Yep.
Every
All
year.
the time.
Do you think it's wise for you to be consulting with your accountant and or bookkeeping team on a weekly or monthly basis to make sure that you're up to date on the changes in tax code?
Oh yeah, because you do tax planning, so you know where to put your assets and your money as the tax code changes.
Exactly, guys. So again, it's not just about getting the bag. It's about, once I get the bag, how do I keep the bag? How do I maintain it? How do I grow it? How do I plan for 3 generations? And I hope the training that me and Cliff are providing to you guys provides you that type of wisdom. Also, guys, we got a little update when it comes to the real estate course. Me and Cliff talking about this, guys. We are going to do something special for everybody. All right. Again, we have courses on seller financing in the Cash Flow Club that you can buy, and we go even more deeper than this. Contracts, partnerships, laws, structure, spreadsheet, you name it, it's there. Subject to investing, the exact same thing. Real Estate 101, the exact same thing. How to be a broker. We're going to go over that most likely next week. How to be a broker as well, which will be fine. Here's the big thing about it, guys. We're thinking about when it comes to, if you join the Cash Flow Club, and the Join the Cash Flow Club, guys, really, it's $99 a month. That's all it is. You get into the room, and the Cash Flow Club, what you typically do is we'll have bi-weekly webinars with our exclusive squad there. Bring your deals, bring your transactions. We'll take a look at them. We help you structure them as well also. And also, if it makes some sense, we'll partner with you and bring the debt to the table. Okay? Very simple. I don't know how many times Clifford has saved my butt. A lot of times when it came to scope of works, values, we looked at a deal in Mississippi. And I said, Cliff, if we invest $20K in each of these assets, how much of a value would it increase? Cliff said, none. Don't do it. Now, if I didn't have that type of knowledge, I would have did it. So, Cliff, how many times, man, have you gotten some counsel, whether it be for me or for someone else when it comes to your investments?
All the time. all the time. My first deal that I did was because I got wise counsel, right? I had somebody who gave me good information about how to approach it because I had a problem. And that started me getting that first deal. He gave me one piece of information.
Yes.
It clicked. And then I think less than 3 weeks later, I had bought my first property because I needed that last piece of information.
So guys, what we're doing is we are for the next 7 days. What we're doing, and I'm typing in it real fast. What we're going to do, guys, is we're going to on all of the course. What we're going to do, guys, is we're going to slash everything off 50% off. Everything off 50%. All of the course is 50%. That goes into effect this evening. Okay, and for the next 7 days, all courses, all thing we ask you to do is to join the Cash Flow Club. We want to give you access to all this information, all this training, all that you actually need, and also access to us because of the fact that you guys are going to have some questions. We did. I know I did. That's for sure. So again, guys, as we're adding more courses to it, and you get to choose anyone you want to go to, anyone. Okay, so if you could DM us, we'll get you over the link. No problem with it at all. And once you do that, you can choose whatever course you want to go to, or if you want to begin in the Cash Flow Club, no problem. That's fine. All we request for you to take advantage of this 50%, real simple, is to join the Cash Flow Club. That's it. Cliff, I think that's a pretty good deal. What do you think?
Oh yeah, man. This is a good opportunity for those who are looking to get that extra information to help you try to grow, be successful, understand a lot of the stuff that you ain't gonna learn unless you have been through it. Unless, like I always say, it's you may know, but we've written the checks.
Oh yeah, boy.
We've written the checks, good and bad. You know what I'm saying?
Yes, sir.
Dale, have you ever made a mistake and had to write a check?
Boy, yeah, man. And it was hard for me to write that check, man. Like, I write a check
telling
for
you.
how much? 20,000? Son of a bitch. It was either that or go to court. Well, there you go, 20,000. I didn't take it as an L. I took it as a learning experience. Said, okay, what did I miss? What did I miss? Who could I have spoken to kind of not miss this? And so I grew in wisdom and knowledge, but also I learned a valuable lesson. So don't be cheap. When it comes to your education and wise counsel, please don't be cheap. We've learned that through experience, Cliff. How many times, Cliff, have you went cheap and it cost you?
Oh man, couple times. Man, probably early on, that was a big mistake thinking that I could go cheap and I end up paying more.
Yep. So, guys, if you're on Instagram, guys, or if you're on any other platform, go to the link in my bio. You actually see the link tree there. You scroll down and you actually see the training link there. Or just DM us, DM me or Cliff, okay? And we get it over to you. If you have any questions, let us know. We do talk to people. We're kind of really busy because we're getting so many transactions. We told y'all it's coming. I believe, Cliff, in this next 24 to 36 months, this is going to be one of the greatest wealth shifts that I've ever seen in my life. The greatest wealth shifts, because there's so many deals. Like we're literally not taking deals. Saying, no, that's not my price point. No. Cliff, tell them, man, real fast, man, and then we'll end it, about you negotiating on some assets, man, you want to acquire, and you just said, no, I ain't buying it at this point. I want it here. And they came back and gave you what you wanted.
Oh yeah. So I had a couple different properties I was looking at in Michigan. And right now, they're asking they're asking what they believe market value to be. I'm coming in near half. Wow. And I'm getting it. Right? The reason why is understanding the market, understanding of what your goals are, and so you can start positioning yourself to take advantage of those things. So it all comes down to what your goals are, how you're positioning yourself. You know, because you're looking to get a good return on investment on your time as well, right? Yes. And so we've taken years, spent checks to try to understand and learn to get to that point. Yeah. So we're trying to basically say, everybody else, we can actually help each other. We can help you with understanding how to navigate these in the correct, proper way to position yourself.
Yes.
And at the same time, when we show you these things, you can actually bring deals in. We can position it and all do well.
And guys, if you don't believe that, go to last week's Real Estate Live training. You can go on any platform, YouTube, Instagram, you name it, and look at that rewatch that again. You can fast forward what you find to the point where we're breaking down and how powerful joint venture partnerships are. I believe there's going to be 3 powerful strategies moving forward: joint venture investing, seller financing investing, and subject to investing. Okay. And there's going to be a 4th one as well called wealth management strategy. Okay. So there's 3 and a bonus one. And guys, we go through all that, guys, every week and in the course. Well, guys, man, that's all I realistically had for today. Click, you want to say anything before we log off big time?
No, that's it. Just, hey, stay tuned, stay involved. Man, join the grind.
Yeah.
It's a grind we on. Y'all want to join the grind, y'all could be a part of it, and y'all can learn. Again, one deal could change your life. That's all it takes.
Oh, let me say this before we get off. Man, Cliff, on the Florida property, man, the budget for that was $600,000, right?
Mm-hmm.
What do we, because Cliff knew how to negotiate from a GC standpoint and an appraisal standpoint, how much did we spend on that renovation?
Like about $350.
So 600,000 minus 350 is 250, right?
Right.
What did 250 go to?
Pocket.
So you mean tell me we pocketed $250,000 on a renovation budget, tax-free? The answer is yes. Because we had wise counsel around us. And this was a different state. I mean, because we're in Texas. This was all done remotely. All remotely. Guys, this is the greatest time in the history of mankind, in my opinion, to invest in real estate with the right wise counsel around you. So, guys, I hope we blessed you on this here. 1 second. It says, hey, fellas, can you please share the link in the chat? Okay, I got you. Somebody wants us to share the link in the chat, man. Hold on 1 second. This is on the training. Give us 1 second, guys. My bad. Everybody, we live and live in color, y'all. We live with it. We live with it, man. What's going on here? Okay, let me go back here. But yeah, guys, I hope we added some value to you guys. I hope we really did. And I'm going to put the link in both areas, guys, so we can see it. 1 sec here. Boom. Got it. All right. Let me put it in the chat for everybody on YouTube. Here we go. There is the link, guys. There's a link in YouTube and everywhere else. Here is the link, guys, in Instagram. Right there, guys. There's the link, guys. Or what you can do, guys, is go to the link in my bio. Just go to the link in my bio, and you'll see what's going on, okay? So, guys, it's very simple. That's all I really have for today, man. I hope we added some value to you guys today, man. God bless you. And you know how we always in this thing, because it's me, and we look better than you. Before you leave, and while you can, you see that thing, take that damn picture for your mama now. Now holla at your partners, y'all. Y'all have a good weekend, y'all. Peace.
God give thanks. Bless God give thanks. Bless God give